Hey everybody, welcome to another episode of the Faye Bishop Report, where the culture is news. I just wanted to do a really quick video today about something that I have been watching for a little bit, primarily because it's my line of work, my line of business, and it definitely is cause for some concerns. I'm seeing articles like this pop up all over the net. It's hitting my email inbox and everything. And it looks like what's going on is that we might be on the verge of another bubble. Real estate bubble, that is. Usually when sales start to drop and the home prices are like, and you see a lot of homes pop up that are like super overpriced. Yeah, that says that something's going on in the market. Something might be getting a little bit rotten in Denmark. And it's a sign of things to come. What's happening is that home sales are starting to slow down. And this happens, just to let you know, every, 5 to 7 years, where what happens is like there's like a real estate boom and it becomes like this really big buyer's market. And as the inventory gets low, well, so does the sales. While it's nothing we should necessarily panic about, it's definitely something that we should start dialoguing about, especially, most particularly, people who are looking to purchase a home within the next 3 to 5 years. It's because when home sales tend to fall, or rather that real estate upswing starts to down spiral, what happens is that a lot of us once again get to the point where we're now stuck in homes and with property that can't be sold. And usually during the boom, there's a lot of predatory lending going on. I know a lot of people think that the bubble of '08 changed all of that predatory lending stuff. It didn't. Right now you have banks like Wells Fargo that's under fire right now for doing predatory lending, particularly with minority families, where they are basically trying to get borrowers to take higher cost loans under terms that many of them don't understand. What the borrower tends to primarily focus on is the amount of money that is being told they need to bring to put towards closing costs. For most of these people, they're being told, bring about $1,500 or $1,600 to put towards your closing costs. Boom, you're going to be a new homeowner. What's not being told to them is the fact that their mortgage payment is likely going to be double that, especially when you factor in the taxes and insurance, and when you consider the interest rate on the loan and the overall lifespan of the loan. And that is where the predatory lending part comes in at, because many of these lenders are clearly taking advantage of people who don't understand how this all works. And they purposely prey on these types of people, particularly people who are first-time home buyers, coming into the door with a credit score that's just above 660, never owned a home before, pretty much spent a good bit of their lives renting, and are minority. For those unfamiliar with what happened during the last real estate bubble, allow me to give you a little bit of clarity and run it down for you a little bit. The whole thing was partly driven by the government. They wanted to push home ownership rates to levels never seen before, and they succeeded at it. Why? Because home ownership is seen as universal good in this country, even now. Whenever you tell someone that you own a piece of real estate or you own property, or whenever people buy property, they just feel like, oh God, now I have wealth. I have hit the lottery, And in a way you have, home ownership is a great thing. Owning property is a great thing. However, what happened during the real estate bubble is this. A lot of people that was renting became homeowners. And they moved into homes that were much nicer than the places they had been renting. A lot of the banks helped a lot of these people lie about their incomes in order to qualify for mortgages. Yes, it was fraud, but it is what was being done. It is actually what is being done now quietly, because I'm starting to see, even amongst my own real estate colleagues, I'm seeing them push. Oh, you only have to put this much down. Oh, you only have to do this. I'm just seeing it in parts of the internet. I'm not going to name names, but I'm just seeing it. They're just basically trying to push the sale. Anyway, what happened is a lot of these people who could not afford these mortgage loans would, close. The deal would be closed once they got the deal, and then their mortgage payment, because they put such little amount down at the closing, their mortgage payment would be, instead of $800, it would be $12, or it would be $13. And a lot of these people who couldn't afford to move into the property in the first place, or could not afford to get the mortgage loan in the first place, ended up defaulting. They would fall behind on their mortgage payments, and then they would default on on their payments. Ended up defaulting on the loan, ended up having to have their home go into foreclosure. And with so many people losing their homes, it just pretty much screwed up the entire banking system in a way that was just unlike anything ever seen. Well, the fact of the matter is, had they not helped these people to lie about their income and trick them into giving them these bad down payments, and didn't fully disclose the amount of monthly payments that would have been due on the loans, the bubble probably would not have happened. That's how. Now, I'm not saying that a lot of banks were malicious with their intent. However, they did act very stupidly, to be fair. I mean, let's just call it what it is. And what I'm seeing now is that it's happening again. Only it's just kind of quietly happening. Some people are catching on, like myself. We're seeing it. And but very few publications are talking about it. I know The Hill wrote an article. There was recently an article posted talking about Wells Fargo doing the predatory lending again. But it's still not something that is making national headlines. And I think that we should just be aware of what's going on around us and what's happening. So just keep an eye out for these kinds of things, particularly if you plan to buy a home over the next year or so. And ask questions. Never be afraid to ask questions. Ask as many as possible, as often as possible. You do not have to go with a particular lender just because they're the only ones that is offering you a loan. Look into your options, weigh them. Ask questions such as the amount of interest you will pay over the life of the loan, most particularly if they're telling you you don't have to contribute much to your closing costs, because that does affect the amount of interest you will pay. And it affects the overall loan value. And it definitely affects your mortgage payment, your monthly mortgage payment. Like it all goes together, because it affects how your savings will be over the life of the loan, the 15 to 30 year life of the loan, how it affects your overall finances. So it all goes together. And in today's market, home buyers and sellers are, especially with the slump that has approached in January, it looks like home buyers and sellers are starting to have trouble again, especially with getting their homes appraised out to the purchase price. And that's resulting in a lot of transactions that are falling apart. So just pay attention to what's going on in the real estate market. Study it. Keep an eye out on the going home value prices in certain areas and neighborhoods and cities that you may be planning to live in, move in, and even the areas where you may be looking to move out of, because gentrification is really driving this thing as well. So I'm Faye Bishop. I just wanted to drop that on you. And don't forget to subscribe. And I will catch you guys next episode.